I'll be explaining about issue number 1, which is when Director Ahmad instructed Alia to recognize all the revenue immediately after the goods have been delivered. But even though the performance obligation have not been fully completed, this was done to increase reported revenue and performance and employees' compensation. And FAR513 is applied in this issue because it explains when and how a company should recognize its revenue. Revenue is recognized only when the company transfers control of goods or services to the customer in exchange for the amount it expects to receive. The explanation for this issue is NTK recognized full revenue immediately after the goods were delivered to Omega Trading Berhad. Even though the goods were fully delivered, the agreement stated that Omega would only pay NTK after the goods were sold to the end customers. Therefore, recognizing the revenue prematurely violates FAR15. This is an example of creative accrual-based earnings management under revenue recognition. There are 3 impacts on financial statement. In SOPL, the revenue and net profit may be overstated. In SOFP, account receivable and retained earning may be overstated. The earning per share also may have been overstated. By applying Aadab, we can see that Ahmad's decisions lack ethical conduct, integrity and accountability because he prioritized and influenced by the expectation that higher reported revenue will be linked to employees' compensation over compliance with FAR15. Ahmad should first observe and think about the payment terms before recognizing the revenue. He should understand that recognizing revenue early violates FAR15 and may mislead stakeholders. He should remember, reflect and show remorse by acknowledging the mistake, correcting the financial statements if necessary, and preventing similar ethical issues in the future. With the right niyat, which is intention, Ahmad should aim to prepare fair and accurate financial statements. He should make the ikhtiar, which is effort, to follow the correct accounting standards and uphold amanah, trustworthiness by ensuring honest financial reporting. Ahmad should always practice muraqabah, remembering that he is accountable for his decision to both stakeholders and Allah. The natijah, which is outcome, is a reliable financial assessment that maintain public trust and comply with FAR15. Next, we will talk about Alia. Alia faced an ethical conflict between following her director's instruction and fulfilling her professional responsibility. First of all, Alia should observe that the director's instruction conflicts with FAR15 and think about her professional responsibility before recording the transaction. She should understand that following the instruction would overstate the company's revenue and profit, which could mislead users of the financial statements. She should remember her ethical responsibilities, reflect and show remorse on the consequences of unethical reporting, and avoid action that violates FAR15. Her niyat, which is intention, should be to prepare accurate and truthful financial statement while making every ikhtiar, which is effort, to advise Ahmad to recognize the revenue correctly. As an accountant, Alia has an amanah, which is trustworthiness, to act with integrity and comply with professional accounting standards. Through muraqabah, she should remain honest and accountable despite management pressure. The natijah is ethical financial reporting that protects the interests of investors, creditors, and other stakeholders while maintaining the company's credibility. Last but not least, recommendation and reflects about this issue. First of all, ethical alternative. The company can recognize revenue only when the FAR15 requirements are met, not just because the goods were delivered. We can create a culture of honesty, accountability, and transparency in financial reporting. For why we choose this kind of method? It is to prevent early revenue recognition and ensures accurate financial statements. Secondly, internal control, which we can require management approval and independent review before recognizing significant revenue. We can also strengthen the role of the audit committee in reviewing financial reporting. For what we choose this method is to reduce management pressure and prevent manipulation. Last but not least, there are ways to improve integrity. First of all, provide regular ethics and FARS training for directors and accountants. We can also establish a reporting channel policy so employees can report unethical instructions. Why we choose this method is to encourage ethical behavior and compliance with accounting standards. That's all from me. We will move on to the next issue.
Okay, Assalamualaikum. I'm Nur Iman Shakira. Okay, so I will present the next issue. So for this issue, we have a two MFRS, which is 116 and 108. Okay, so we will go one by one. So for MFRS 116, define PPE as assets that are held by an entity for use in the production of goods and services, for rental to others, or for administrative purpose, and are expected to be used during more than one reporting period. Okay, so for a definition of useful life is the first one, the period over which an asset is expected to be available for use by an entity, or the number of production or similar units, the useful life or depreciation rate used. Okay, so for this issue, Ahmad changed the useful life without proper justification or evidence the asset's actual condition. Since MFRS 116 require entities to disclose the useful life or depreciation rate use, any revision to the useful life should be supported by proper technical assessment, maintenance history, and others. Okay, so for the impact of this issue, the depreciation expenses will decrease, useful life increase without justification, profit before tax and net profit may be overstated in SOPL, and carrying amount of PPE may be overstated in SOFP. Okay, so we continue with the second MFRS, which is 108. Okay, so 108 explain the criteria for selecting and changing the accounting policies together with the accounting treatment and disclosure of change in accounting policies and change in accounting estimates and correction of error. So there are three. So according to MFRS 108, change in asset useful life is legally defined as change in accounting estimate. So, FRS 108 orders that must be based on the latest available information. So, if NTK want to revise the useful life of the manufacturing asset or something, the change must be based on a proper technical assessment, and change should be applied prospectively, which is change will affect future and the present. So for the impact of this issue, it will get inaccurate depreciation and misleading profit figures. Okay, so for next, we have OTUR3, which is observe, think, understand, remember, reflect, and remorse. Okay, so for this, we will go one by one, which is Ahmad first and then Alia. Okay, so for Ahmad, we have Ahmad observe that extending useful life of the company asset will reduce depreciation expenses, which will increase NTK reported profit for the year. So he think revising the useful life of the asset without a proper technical assessment to achieve better financial performance. So he understood or understand that any change in the useful life of PPE is a change in accounting estimate and should be supported by reliable evidence and professional judgment under MFRS 116 and 108. However, he did not remember his responsibility as a director to ensure that the company financial statement were prepared fairly and accurately. So he should have reflected on the impact of his decision because it could mislead users of the financial statement. He should also have felt remorse for putting higher profit ahead of honest financial reporting. Okay, so for the Alia observed that Ahmad asked her to revise the useful life of the asset without any proper technical assessment. So she think about following his instruction because she was afraid of losing her job. So she understand that change in accounting estimate should be based on reliable information under MFRS 108. However, she did not remember her responsibility as an accountant to act with integrity and objectivity. So she should have reflected on the importance of questioning an inappropriate instruction instead of simply following it. So she should also have felt remorse for following the unsupported accounting estimate to be used, as they could affect the reliability of the financial statement. Okay, so we also have NIAMN, which is Niat, Ikhtiar, Amanah, Muraqabah, and Natijah. Okay, so for this also we will go one by one, start from the Ahmad and Alia. So for the Niat, Ahmad Niat was to increase the company reported profit instead of showing the true financial position of the asset. So his ikhtiar was inappropriate because he changed the useful life of the asset without proper technical assessment or supporting evidence. So he failed to fulfill his amanah as a director because he did not ensure the financial statement were accurate and reliable for shareholder and investor. So he also lacked muraqabah by allowing the desire for higher profits to influence his decision instead of acting responsibly. As a natijah, an NTK profit and asset value could be overstated, which may mislead a stakeholder and reduce their trust the company's financial reporting. Okay, so for the Alia, Alia niat was to protect her job and follow Ahmad's instruction. So, however, her ikhtiar was not appropriate because she accepted the change even though there was no proper evidence to support it. So she did not fully carry out her amanah as an accountant because she should have ensured the accounting treatment complied with MFRS 116 and 108. So she also let muraqabah by letting management pressure effect her professional judgment, and as an natijah, she could become involved in earnings management as a natijah, she could become involved in earnings management and contribute to financial statements that do not fairly reflect NTK actual financial position. Okay, so for next, we go to discussion. We have a three. So for the first one, pressure, incentive, or performance target. So for the management pressure, okay, we start with the management pressure. Ahmad was under pressure to show a good financial performance because NTK wanted to maintain investor confidence and support its business growth. So for incentive that Ahmad do, Ahmad believed that increasing the useful life of the asset will reduce depreciation expenses and increase the company reported profit. So the performance target, NTK wanted to show strong the financial performance to its stockholders. Ahmad changed the accounting estimate to make the company appear more profitable. Okay, so for the second discussion, we have ethical conflicts, which is the conflict between Alia, responsibility as accountant, and Ahmad as a director. So under MFRS 116 and 108, change in useful life of the asset should only be made when there is proper evidence and technical supports. Even though there was no proper assessment, Ahmad as a director still asked Alia to make the change to improve the company profit. So Alia had to choose between following her manager's orders, or acting to her professional responsibility. So for the last one of discussion, we have evaluation, which is Ahmad's decision was influenced by his desire to report the higher profits. Instead of relying on a proper evidence, he changed the accounting estimate to improve the company financial performance. So this action may reduce the reliability of the financial statement and may cause the investor or the other users to make decision based on inaccurate information that they will get. Okay, so next we have recommendation. So for the first recommendation, it comes to alternative recommendation. So Alia should discuss the issue with Ahmad and explain that any change to useful life of an asset must comply with MFRS 116 and 108. So if Ahmad still refuses to correct the issue, Alia should raise the matter to audit committee or the board of director. Okay, so for the second, we have governance improvements, which is NTK should introduce stricter approval procedures before any accounting estimate is changed. So the company should also encourage employees to report unethical behavior by providing a confidential reporting channel. Okay, so for the third one, measure to strength. So NTK should provide, or company should provide regular ethics and MFRS training for management and accounting staff, and senior management should also respect accountants' professional judgment when making accounting decisions. Okay, last but not least, you have how to prevent this issue, how to contribute this issue, how to ensure this issue. Okay, so we will start with how to prevent. Okay, how to prevent this issue. Before changing the useful life of asset or other accounting estimates, NTK should ensure that every decision is supported by technical assessment and reliable evidence. So the company should also carry out the regular reviews of significant accounting estimate to make sure they comply with MFRS. Okay, so how to ensure NTK can improve compliance by reviewing the useful life of the asset regularly, making accounting estimate based on reliable information and not on profit targets, having independent auditors review important accounting decision. Okay, so how to contribute? NTK should encourage honesty, transparency, and ethical behavior in the workplace. So employees should feel confident to raise the concern when they believe an accounting decision does not comply with MFRS. Thank you.
Hi, my name is Zafira and I will explain about the third issue. The issue is one of the NTK's client, which is Al-Fateh filed for bankruptcy before the financial statement were approved for release. This bankruptcy has a major effect on NTK's trade receivable, but to meet the loan covenant and to support the company's expansion plan, the finance director ordered the event not to be disclosed or adjusted in the financial statement. For the accounting standard, which is MFRS 110, The definition is event of the reporting date as those events, both favorable and unfavorable, that occur between the end of reporting period and the date when financial statements are authorized for the issue. For example, for the event, adjusting event, and indicative of condition is non-adjusting event. So now I will explain about FAR513 berhad bankruptcy before the date authorization of the financial statement for issue as is an event after the date of statement of financial position as accounted for under FAR513. Since FAR513 berhad was already financially distressed when it filed for bankruptcy, the bankruptcy further confirmed that the trade receivable was impaired as at the reporting date. This is an adjusting event in accordance to FAR513. For the impact is NTK should recognize the impairment loss, reduce the carrying amount of trade receivable, and accordingly adjust profit for the year.
For the same issue, we also need to apply MFRS 9 financial instruments. MFRS 9 is to replace MFRS 139, which is financial instrument, recognition and measurement from 1 January to 2018 for improvement. Significant changes in MFRS 9 are related to the classification and measurements of financial asset. It also adopted an entirely new principle-based approach to classify and measure the financial asset. If the financial asset are debt instrument, then it will be classified on the basis of the business model. So, MFRS 9 permits financial asset can be classified into three, which are first, financial asset at amortized cost. Second, financial asset at fair value through other comprehensive income. And lastly, financial asset at fair value through profit or loss. So, in this situation, by applying MFRS 9, the financial asset, which is trade receivable, need to measure at amortized cost. It is because the company business model is to hold and receivable and collect the contractual cash flows from the customer. Even though FAR513 has already declared bankrupt, the classification does not change because NTK still intends to collect the receivable. Plus, NTK should recognize FAR513 as expected credit loss (ECL) to reflect that trade receivable will not be fully collected. The recognition of expected credit loss (ECL) will affect first statement of profit or loss because the impairment loss is recognized as expense and resulting in decrease of company's profit. Next, it will also affect statement of financial position by reducing the carrying value of trade receivable. In addition, the lower profit will reduce retained earning in the statement of changes in equity.
By applying auto trade to Ahmad, first observe FAR513 filed for bankruptcy before financial statement were approved. Second thing, by maintaining profitability and avoiding a loan covenant are more important than following MFRS 110 and MFRS 9. Third, understand he unable to comprehend that the bankruptcy is an adjustment event that requires receivable to be impaired. Fourth, remember directors are accountable for making sure financial statements are made honestly. Reflect and remorse. It is important to understand that withholding pertinent information is a mispresentation of stakeholder. Alia. Observe Alia was aware that collectability of receivable was affected by FAR513 bankruptcy. She realized that director asked was inappropriate, but she was afraid of losing her provision. Third, understand note to MFRS 110 and MFRS 9 require the receivable to be impaired. Remember, accountant must be honest and professional in their work. Reflect and remorse. Consider the possible consequences of following unethical comment. Now I will explain about NIAM. NIAM is intention, ikhtiar, effort, amanah, transparency, muraqabah, accountability to Allah, natijah is outcome. For Ahmad, he is to protect the profit. His niat is to protect the profit out of the loan covenant and attract additional investor. For he ikhtiar, rather than hiding information, he should make every effort to follow accounting rule. Amanah, by hiding the bankruptcy, he failed to uphold the confidence of stakeholder. Muraqabah, it is important to remember that all action have accountability to Allah. Natijah, misleading financial reporting, losing stakeholder trust, and facing legal action. Now I will explain Alia's Niat. Alia she intended to carry out her responsibility but was motivated by her fear of losing her job. Her effort, she should consult the management, audit committee or auditor. Amanah, she need to prepare a true and fair set of financial statement. Muraqabah, she needs to be truthful regardless of the pressure applied by the management. Natijah, being ethical will lead to a compliance to MFRS, proper financial reporting and stakeholder protection. For the discussion, influence of management pressure, incentive and performative target of Ahmad was under a lot of pressure to keep the debt to equity ratio under 50%, not to break the bank loan covenant and show good earning to potential investor. This pressure led him to instruct Alia not to recognize the bankruptcy, although it was breach of MRS 110 and MFRS 9. This is the case of earning management where the management is manipulating the financial reporting to achieve the desired financial result and not to give a true and fair view. In ethical conflict, Alia was in dilemma whether to follow her director or professional accounting standard. She was accounting on probation and was afraid to lose her job if she questioned Ahmad's instruction. But as for a professional, she has to comply with MFRS 110 and MFRS 9 to maintain integrity and objectivity. To obey the director's instruction would be violated the ethical duties and could lead to legal and professional consequences to her and the company. For the evaluation of Aadab, Ahmad failed to act with integrity and accountability by instructing Alia to hide Afantak's bankruptcy. His action misled stakeholders and prioritized the company's short-term interests over ethical reporting. Although Alia knew the instruction was wrong, she followed it because she feared losing her job as an accountant. She should have upheld professional ethics by reporting issue through the appropriate channel to ensure accurate and to be transparent.
For this section, we will discuss about three things. First, alternative recommendation. As a responsible director, Ahmad should not hide the information about Alpha Tech bankruptcy. According to MFRS 9, he should have recognized the trade receivable as expected credit loss. For Alia, she need to seek for professional advice instead of following an unethical instruction. Next, for governance improvement, to strengthen company's internal control, all significant financial reporting decisions must be reviewed by the audit committee or external auditors. A whistleblowing policy also can be introduced so that employees will not be scared to point out the unethical behavior. Lastly, to make sure all the employees follow work ethics, companies should provide regular training on accounting standards and also professional ethics. The management also may promote an ethical working environment where employees feel comfortable to voice out their concerns. Now, I will explain the reflection on the recommendation that we have discussed earlier. When the financial reporting decision was being reviewed by the audit committee members, then the risk of making fraud may be reduced. Other than that, the existing or whistleblowing policy may protect the employees from being fired if they want to report any misconduct behavior. Second, how to ensure this recommendation may help the company to comply the company's report with MFRS 9 and also MFRS 110. Regular training also may help the employees to apply and also understand standards correctly and reduce the risk of errors. Third, how to promote. This recommendation may encourage honesty, transparency in financial reporting. By reporting all the material information, the financial statement may provide a true and fair view of company's financial position. This will help users to make better economic decisions. Lastly, how to contribute. An ethical culture may encourage people such as employees and also management to act with integrity and also responsibility. When ethical behavior becomes part of the company's culture, then external user will have greater confidence in the company. This may support the company's long-term sustainable and also reputation.
So let's move on to the issue number 4. So what is the issue? So the issue is whether NTK Berhad comply with MFRS 113 earning per share by only disclosing the basic EPS and omitting the disclosure of diluted EPS after issuing convertible debt. So as we can see, MFRS 133 doesn't involve the management personal confidence. So the moment the convertible debt is signed, the standard forces the company to provide test for dilution, present diluted EPS on the face of the income statement if it is dilutive. Okay, next for the accounting standard of MFRS 133. So, according to this MFRS, listed company must disclose earning per share (EPS) in their financial statement. If a company has a potential ordination, such as convertible debt, it must present both basic EPS and diluted EPS. If there are no potential ordination, only basic EPS is only required. Okay, so for the explanation for the related issue, which is the number 4, in this case, entity issue convertible debt, which is a potential ordination under MFRS 133. Therefore, the company should present both basic EPS and diluted EPS because convertible debt may reduce EPS if converted into ordinary shares. Lastly, disclosing only the current basic EPS with minimum information does not fully follow the requirement of standard MFRS 133. Okay, so what's the impact of Ahmad actions? So the first one, EPS may be overstated because convertible debt can dilute earning per share. Okay, so the second one is non-technical disclosure is incomplete under MFRS 133 because company with potential ordination should present both basic EPS and diluted EPS. Okay, so the last one is investor may make less informed decision because the possible future reduction in EPS is not clearly shown. Okay, so let's move on to the next one, which is OTUR3. So for the first one is observe, Ahmad choose to disclose only basic EPS despite that the issues of convertible debt, which is a potential ordination that may dilute earning per share. Then Alia was expected to follow his instruction, even though that she knew that the disclosure might not fully comply with MFRS 133. So, think Ahmad should have considered whether the convertible debt could potentially dilute EPS. Rather than making assumption, he should have evaluated the accounting requirements carefully and sought professional or more knowledge advice if necessary. Omitting diluted EPS may mislead investors about the company's true financial performance, making them curious about their results. So, the next one is to understand, according to the MFRS 133, for the entity with potentially dilutive ordination are generally required to present both basic EPS and diluted EPS when applicable. This requirement improves transparency and allows investors to know the possible impact of future share conversions. Okay, so further remember, as a professional accountant must know to comply with accounting standard and upload integrity, objectivity, responsibility and transparency. Financial statements should present a true and fair view rather than non-true reported information just because of the benefit in management. So for the reflect and remorse, Ahmad should acknowledge that relying too much on assumption without proper assessment could highly reduce the reliability of the financial statement. He should correct the disclosure and ensure the full compliance with MFRS 132 in future reporting to maintain stakeholder confidence and their relative trust. Okay, so for our niat, which is niat, ikhtiar, amanah, muraqabah and natijah. Okay, so the first one is niat. Ahmad's intention appears to be maintaining favorable APS figures and avoiding negative perception from investors and lenders rather than ensuring transparent financial reporting. Instead of assuming the convertible debt had no impact at all, Ahmad should have made reasonable effort by assessing the potential dilution effects or consulting accounting experts before finalizing the financial statement. Ahmad, as a director, his trustworthiness has been violated because he failed his responsibility to provide a complete and reliable financial information. Providing only basic EPS with minimal disclosure may breach his responsibility and reduce stakeholders' trust. And Ahmad should have remained conscious and complete absent of his accountability that his decisions are accountable not only to shareholder and regulator but also ethically for ensuring honest financial reporting. And lastly, the decision may mislead the investor, reduce transparency and expose entity to regulatory non-compliance with MFRS 133. In the long term, the outcome will damage the company reputation and investor confidence and trust.